Good morning, ladies and gentlemen. Welcome to Miami. Welcome to United States. Many of you, I understand, are from Latin America. It's wonderful to see so many of you over here today. As Ray mentioned, just a little bit about myself. I've been in the banking business throughout my career. I was on the board of Banco Santander, so I'm very familiar with Latin America, and we went to board meetings with Emilio Botín over there. So one of the things which I've always despised is that banks are not doing enough to make a difference in the lives, positive difference in the lives of the customers who they serve. But when you ask them, what's your mission? They always say, we are in business to serve customers. But actually, what do? They're in the business to screw customers. That is sort of where I concluded. So we started right now. I'm the chairman of a New York Stock Exchange company, and we have two banks. One is a business bank, and one is a consumer bank. And the consumer bank is BankMobile. So I'll be talking more about that today. So in our opinion, fintech, definition of fintech is something that banks should have been doing, but they chose and decided not to do. That's it. So there is nothing else there is to it. So partnerships and those kind of things is very, very critical because it is something you should have been doing anyway. And second opinion is that fintech or technology without a strategy is perhaps the biggest waste of money. And strategy without people for superior execution is a recipe for mediocrity. So you want to excel, you got to have a strategy, you got to have the people who can execute that strategy, and then you got to be customer-centric. Three things, very critical. So I'm going to go very, very quickly because we thought we had a lot more time, and really talk about strategy and why are we doing what we are doing. And I'm going to invite Luvleen to maybe do most of the talking, and I'll just set the landscape. American banking is very antiquated. In my opinion, the most antiquated industry in the United States is commercial banking, right? And their innovation has been non-existent. But when you think about what is the bank supposed to do, they're supposed to acquire customers, they're supposed to have the customers be engaged with them, they're supposed to have an emotional attachment, and then they got to make them customers for life. Okay? And they are reasonably good, some of them, but generally speaking, they're doing a lousy job, in my opinion, so somebody who's been in this business. What are the things that banks are supposed to really do from a customer point of view? They're supposed to help them protect their money, make a good return on their money. And you know how much banks pay in the United States for people keeping their money from consumers? 0.01%. Why? Because they can say we pay interest. And so so there is an opportunity. Again, I'm talking about like fintech. You can have an opportunity to protect the money, you can give them a good return, you can help them save their money, you can help them become smarter about their money, you can help them achieve their goals, you can be a trusted advisor, and you can be engaged in giving back. We, as a company, really, really believe in helping people financially succeed and giving back to the communities as such. So you are very well aware of the mega trends, and everybody's been talking about it as such. But in the United States, the reality is a third of Americans are living paycheck to paycheck. About half the Americans do not have enough to pay for a $400 emergency. And 20% are saving nothing, and 50% are saving less than 5% of their income. And Americans are paying to United States banks $33 to $34 billion a year for overdraft fees, which is costing the banks about $1 billion. That's 34 times a cost. And again, like I said to you, example is they'll tell you, we're in the business of helping customers. No, they're in the business of screwing customers, in my opinion. So what's going on in banking? You know this. 0.1% of banks in the United States control 50% of all the assets in the United States. And the other 5,000 to 6,000 banks, okay, which is 99.9% of the banks, they control the other 50%. So you can almost ask yourself a question, where is banking heading in US? And what are the opportunities? So let me quickly share with you a little bit about that. I'm going to draw some parallels to the retail industry. So in retailing, you have in phase one, like the ma and pa stores, the small retail stores, and unless they were unique, They were put out of business, and that's how small community banks are. Unless they have a unique strategy, they're going to be having a very difficult time staying. Phase 2 is where you became some regional players. And you saw those kind of things like Borders opened up lots of stores all over the place, as an example. And same way you saw some of those regionals, and that got into the super regionals becoming more, and that's more like the Walmarts got started in the retail space. And then you started seeing retailers start to spend a lot on technology, including all these companies that you see listed over here. But who are the winners? The winners were the ones who were very focused, had a strategy, had the people, had the resources, and are customer obsessed with giving the customers what they're looking for. In other words, they're customer-centric, and those are some of the names on the right side in the retail industry. Same way, in the banking industry today, you're seeing banks talk about open banking, modular banking, omni-banking, smart banking, use of artificial intelligence, and I've listed them, and they're trying to say, more you spend, the more chances you have for success. Where is the strategy? And that is almost scary that somebody, you had the two biggest mergers announced in the United States, BB&T with SunTrust right here in the northeast and southeast United States. And they said the reason is because we don't have enough money to spend, so we're going to cut the cost and we're going to put that into technology. Does that mean anybody who doesn't do a super merger doesn't have an ability to compete? Absolutely incorrect. I used to run the 17th largest bank in the United States. You don't have to do a merger to suddenly come up with a different strategy. So the point that I'd like to make is there is a huge opportunity, but you must have a strategy, you must have people, you must be able to execute, and you must bring value to your consumers. Okay, so we are, again, with all the things they're talking about, personal finance, personal advisory, whatnot, we sit there where we start with what can we do for the customer as such. And here's an example of where we are today, or developing. Let me introduce to you Luvleen Sidhu now. She also happens to be my daughter. And so I was running Customers Bancorp, which is now Banco Santander in the United States. And so she went to Harvard. And so she said, my God, Dad, I don't want to open an account with anybody else other than your bank. So we ended up actually opening a bank branch at Harvard Square. And she comes back and says, 25 minutes it took me, to open an account. And to make a long story short, she came to us with an idea. Why don't we create a customer-centric digital bank? So she's a co-founder of BankMobile, and I'll let her take it from here.
Great. So when we started BankMobile, about 4 years ago, it was really with this vision and mission that banking can be done in a better way. We had a vision that we could do it in a more affordable way, with more transparency, consumer-friendly products, and really to create a financially empowering experience for our customers. And so I remember when we first started, we got locked in a room and we had 5 mandates that we kept in mind. One is how could we create a better product than exists today that can build an emotional connection with customers? Can we make it more affordable? Is it easier to use? And can we have an income and growth model that is at least equal to, if not better than traditional banks? And then bank branches are illegal. So with that in mind, we developed our strategy. And today, with approximately 2 million accounts, we are a top 15 bank in the country in terms of number of consumer checking accounts. And not only are we acquiring customers at really high volumes, but we're disruptive in the sense that we're acquiring them at exponentially lower cost than traditional banks. Today, we're acquiring our customers for no more than $10 versus traditional banks spending $300 to $500 or more to acquire a customer. And so, a couple of our guiding principles: we keep it simple. We want to make sure that technology creates a first mover advantage, but it really can be copied. Banking products, at least as they exist today, are commodities in a way. And so we really focus on the best design, best user experience, and really providing a high-touch experience, even though we're high-tech, to develop really good customer service. We speak with an authentic voice. We really believe in the vision and mission that we stand for. And we're all about being a data-driven company. How can we learn what our customers are saying? What do they want? What are their goals? What's working for them? And then respond and iterate quickly to make sure that our product reflects that. So how are we disrupting the traditional model of banking? So when we first started, we started with a direct-to-consumer model, where we were going with our mobile digital experience directly to the customer. And what we found was that we could do this in an exponentially better way. And so we shifted to a B2B2C model. Traditionally, we think of B2B2C as the bank to the branch to the consumer. And in reality, bank branches in the US are opening 1 net new checking account per branch per week. So 52 net checking accounts annually per branch, which is not an efficient model in my opinion. So our B2B2C model is bank to business partner or distribution partner to the consumer. And so we've really focused on finding the right partners with strong, loyal sort of customer bases, large customer bases where transactions are taking place, and for us to intervene and get into that moment in time and to be able to open bank accounts. So where are we doing that today? Today we have relationships with 800 campuses across the country in the US. 1 in every 3 college-bound students goes to one of these 800 colleges and universities. And instead of a traditional bank that's paying millions and millions of dollars to schools to have a presence on campus, to sponsor the arena, to have the ATM, to have the branch, we're in the business of solving consumer pain points and finding solutions. So for the schools, we help them send payments between themselves and to the students. And in return, students get to choose, do they want to open a BankMobile account or do they want to ACH to an existing bank account? And so that's an example of how we intervened ourselves into a place where someone would be looking for a bank account. And today, we're opening 5,000 accounts a week through just our student channel. And we're looking at how do we create a customer for life. So not only from banking products, we're always looking for partners, fintechs. We've partnered with Upstart to do personal loans and credit cards, LendKey to do student refinance, et cetera. And then moving towards a subscription model, which a speaker talked about yesterday, where it can go beyond financial services. What other value additive services can we provide to our student population to really help them grow? Where else have we gone with our B2B2C model? Most recently, we launched a partnership with T-Mobile, which we are so excited about, and we launched a product called T-Mobile Money, which is an amazing checking account with awesome features and products. Please check it out at tmobilemoney.com. They're an excellent example of a partner where they were disrupting the telecom industry, we were disrupting the banking experience, and now together, we're working together to be able to solve another consumer pain point around the mobile experience, which is mobile banking. And this is a short video to talk about this.
When it comes to banking, the struggle is real. You find yourself here, or here, and you definitely don't want to be here. Banks want to keep you as a customer so your money can make money for them with shamefully low interest rates. and an average of $130 in fees per customer every year. You'd think there's got to be a better way, right? Well, we heard you. Introducing T-Mobile Money. Not another bank, a better one. Where your money is safe, secure, and FDIC insured, with insanely high interest rates, which only get better for T-Mobile wireless customers. T-Mobile Money has no account, minimum balance, or overdraft fees. Oh, and here's more for you. Our network has more no-fee ATMs than Bank of America, Wells Fargo, or Chase worldwide. The setup is simple and all done on the T-Mobile Money app or T-MobileMoney.com. And of course, anytime you need us, we're here for you. 24/7, 365. T-Mobile Money. Not another bank, a better one. Get started in minutes at T-MobileMoney.com.
We want to continue building this partnership model, and I think there's ample opportunity for us where there are businesses that have large captive audiences, loyal consumers. They transact in some nature or another with that institution, and so there's a lot of touch points to be able to interject the bank account, and we're really looking at different verticals and industries to continue this model.
Sorry.
And I just wanted to show you a brief video that is Forrester research that was really talking about this new model of banks connecting with tech companies and large companies with strong brand followings, and how should banks be reacting to this new trend. So just wanted to show you this.
Well, I would say yes. The reason is because, the worst fears of many banks is now coming true. That fear that large telcos and non-bank brands are going to enter into the banking arena. So we've got Apple announcing their foray into banking and their partnership with Goldman Sachs. We've got T-Mobile with T-Mobile Money entering here in the US. And both those firms have very strong, well-known brands. They have a very large existing customer base, and customers have a strong emotional connection to that brand. And that's the key reason why banks should be worried, because banks don't usually have a strong emotional connection to their customers. In fact, our customer experience index research tells us that banks don't do so well on emotion when it comes to customer experience. And what we do know from our research is that emotion is the biggest driver of loyalty. The other reason why banks need to be worried is they're really going to have to lift their game. Both Apple and T-Mobile are changing product design. So T-Mobile, the product that they've launched, great high interest rate for accounts up to $3,000 if you're an existing T-Mobile wireless customer. And that's going to attract a lot of deposits from T-Mobile's 80 million customer base. So the war on deposits is going to get even tougher for traditional banks. But in addition to that, the new checking account that T-Mobile have offered also offers free overdraft. Again, something usually unheard of, at least here in the US market. So customers in T-Mobile's checking account will have a $50 free overdraft, well, free as long as they repay it within 30 days. So the bar is being raised on product design as well as this emotional connection to very, very strong brands. So I do believe that banks should be concerned, and there's many areas where they're going to need to lift their game, as I said, in product design and how.
Great. So that just gives another perspective on the trends that are taking place, the new partnership models that are existing, and what does that mean for banks. I think it's very clear to us that we're living in a new era where we have to be very innovative about how we're attracting customers, how we're engaging with them, and how we're going to retain them. And I think there's a few key things that I keep in mind as I'm thinking about the future of banking. One is that we have to continuously think about how we're going to just move away from just focusing on money transactions, because that's table stakes. We just have to learn how to make it faster and more seamless, and really moving towards money management. You know, there's ways to help us get directions from where we are today to where we're going, make a left, make a right. We need to have a ways for financial advice and management in real time to help people get to their financial goals. We need to start working towards an open banking model where we can work with not just fintech partners, but other value additive services through an API model to create an ecosystem and a marketplace for financial services, similar to the E&Y speaker yesterday talking about the subscription model. Third, the Internet of Things. Everything is slowly becoming a wallet. Your fridge, your car, your Alexa, we need to adapt and evolve to be able to adjust to this changing environment. We're living in a high-tech world, but we need to maintain high touch as well. So how can we implement conversational AI to get that high-touch experience through technology? And looking at advanced biometrics, not just for fraud management, but also convenience for the consumer. And then obviously the buzzword of blockchain, how can continuously we develop more use cases for operational efficiency on the back end, fraud management, and then maybe even use cases in the future for payments. You know, overall, it's very clear that the days of screwing customers and hoping that you're going to make money from misinforming them and from them mismanaging their money are really gone. And we have to look for new ways to really take advantage of the world that we're living in. So I wanted to just leave you with really brief, because I'm over time. It's important to have a massively transformative purpose. What is your why? Why are you in your business? What is the consumer pain point that you're solving for? How can you shift away from incremental thinking and 10% improvement to moonshot thinking? How can I be exponentially better in maybe just one thing to be able to serve my consumers? And I think getting fresh blood, young blood into your organizations, 20-year-olds, to inject some of that energy, I think is very valuable. Rapid experimentation, you know, continuously to innovate, and then also what I said before about disruption begins with something that's better than what exists today, more affordable, easier to use, and has an income and growth model than what is better with than what exists with traditional banks. And so I just wanted to leave with one of my favorite quotes: "If you disrupt, you must disrupt yourself, or someone else will." So good luck, and let's change this industry together.